Good morning, October 27th, Thursday. Market analysis, Stan Ehrlich. It's about 10:15 California time. A little late for me to make my recordings, but sometimes early, sometimes late, around 9 o'clock. I always start with the S&P 500, the ETF SPY is the code. It's my go-to index for the markets overall. But there are some nuances that occur, like today, with the QQQ relative to the Spider and the DIA, the Dow Jones relative to the Spider, and even the Russell 2000. So today, with the SPY, the S&P 500, we have a relatively calm, sideways, for the most part, trading range day. We got a little below yesterday's low, but not by very much, after opening slightly higher and going up to a little higher than the middle of yesterday's range, which was a normal range. And that was a down day yesterday, but the first down day in 3 previous days. So on the 4th day it slipped a little. Today we're going sideways. The low is lower than yesterday by a small amount. Today's high is lower than yesterday's high by a small amount, and we're currently trading up a quarter of a point, which is basically unchanged, hardly anything. Okay, the market's resting. Are you going to have a downside move or an upside move from this resting period, which is around 382? Give or take a couple of points higher or lower, 2 or 3 points higher or lower. I still think that we are in an upswing because the October lows are in place, in my opinion. October 13th was a gigantic bullish green Ehrlich reversal, ER signal specifically. That is my 100% automated trading system. It produces the color and the signals and the prices and the entries and exits for trades. So the S&P gave me a blatant buy signal on the 13th of October, plus the October lows were expected for quite a bit of time. Prior to that, I've been talking about them. And it turns out that it is the head of a head and shoulder bottom, because we realized that last Friday, one day less than a week ago, was the last shoulder low using another bullish engulfing, and the neckline was crossed on Monday of this week, and we didn't look back. Classic upside breakout. The minimum objective on this pattern is approximately 403. But there is some very good resistance around 410 and a little higher. So my minimum upside objective for the month of November, for the most part, maybe into December somewhat, is 403 to possibly 410. Then the bear market's going to start again. I don't expect this bear market to end until we get down to approximately 320. And it's going to be, I think, late spring or early summer. We'll see. I'm not used to forecasting out quite that far in advance, but I've got a good concept here, I think, and I'm still looking for a lot lower levels. After this short-term 3-month total, October, November, maybe into December, rally is over. All right. Enough about the spider. Basically, the same thing applies to the Dow Jones, except that, and I'm sorry, I got my scaling off there. The Dow Jones actually had a double bottom formation and broke out of the double bottom on a closing basis early last week, and is now on its way up very nicely. We actually have reached the minimum upside objective already for that double bottom. So that pattern's worked past tense. Can we get more strength? Of course. And if I'm going to be right about the spider, probably on the DIA as well. And I'm looking at levels of 328, maybe a little above 330. For it to top out and start to work its way back down again. There is an old gap that's closed around 336. I can't rule that out. but that would be by far and away my most aggressive upside objective for the DIA. And a quick comment about the QQQ, which is very similar to the Spider. The Qs also had a head and shoulder bottom. The dates were exactly the same. The first shoulder for both September 30th, October 13th, bullish engulfing key reversal for both of them. And the last shoulder low was last Friday for both of them. We were a little bit stronger and broke out the same day on the Qs, not quite, almost on the Spider. But in the last few days, the market has gone up, which it normally does, and come back down toward, but not below, the neckline, which so far the Qs have actually done a little better job of doing. We didn't get overbought yet. We still got upside room. It looks like we're going to turn up very soon. I wouldn't be surprised if it was by the end of the day, or maybe on tomorrow's market, Friday's market, which would be the 28th, of October. But soon, and make new highs for the move up completely. New highs for well over a month. All right, to corroborate with that, gotta have a little more evidence. Here's your October lows. This is weekly data, smack in the middle of October so far this year. Great. A year ago, within that green bar, which is covering the month of October, time frame wise, about 4 weeks. That was an excellent October low. We were just slightly early, or at the very end of October, the year before that, which was 2020. The October before that. The October before that. And before that, there wasn't any pronounced low, but if you bought during the month, you still would have made money in November, December, and maybe a little in January. I can show you more, not particularly important. It's worked approximately 90% in the last 30 plus years. All right, bonds are a very important part of this market these days. As these charts start to go up, the actual rates start to go down. But we are talking about day-to-day data and not a major decision, which doesn't happen that often, from the Fed about raising or lowering rates. But these charts indicate what the bank-to-bank day-to-day, very fine-tuned, small changes in rates are doing. And they have started to rally the last couple of 3 days, 4 days, and that means rates are actually coming down very slightly on the interbank markets, which is good for the stock market overall. So it doesn't make much sense for yesterday and today's dip on the stock indexes, but they got a little overbought and they deserve a rest like they're getting, while we may have some more strength, I hope, and frankly expect, on the 30-year long bond and the 10-year note. So I like that, and that looks good for my forecast in the industry overall, stock market stuff. Futures. Do we have any new signals today? And I'm just scanning here real quick for either a green or red bar on today's data, and I don't see any yet. So let's start with natural gas. We had a sell signal at the top of the market. That worked just great. For a few days we were oversold, and I mentioned that, and we have had a little bounce. Not too much. I kind of expected a little more, which still may happen. But the oversold condition gave you an indication that this bounce was totally expected. Next chart, no particular signal. We got the top of the market in platinum for the year way back in March. We have another sell signal, was fantastic. A couple of more modest, profitable trades signals in the last couple of months. Right now, getting kind of overbought, not quite yet. A little bit more would be more significant resistance, and then I would expect to get a downside correction, but not quite yet. A little bit friendly to platinum. Next, soybeans, not really much to say. Neutral. I'm waiting for a signal. Next, E-mini, we talked about the bottom of the market on October 13th. It's doing fantastic. Next, cattle, overbought, started to slip a little bit. I'm slightly reactionary in an uptrend, but I think we can slip a little bit more in the very short number of few days in front of us. Next, Bond futures, we talked about it a moment ago. Rallying, looking good, has a little bit more upside potential. Soybean meal, fairly neutral, not too much to say. Heating oil, had a good sell signal for a few days. Now we're in new high ground since then. Don't have anything to go on at the moment, but we're getting a little too close to overbought and already kind of going sideways. I'm going to go flat and neutral here, except for the fact that you could have a very broad, major, huge double top. Way back in June, we picked the top of the market to the exact day. And so far, I don't have another sell signal in the same price range, but we are in the same price range. Possible broad double top. Too soon to say. Need to have quite a bit of downside move first in order to be a little more aggressive about that prediction. Next, crude light in a downtrend, still kind of neutral for the moment. YM overbought short term. This is the stock market index, the E-mini Dow Jones futures. Next, overbought soybean oil, expecting a downside correction in any day, like today could start. Sugar, now getting oversold, looking for a little bounce. And cocoa, nothing to say. Rough rice, bear trend, staying in an oversold condition, very, very oversold. When, not if, we begin a bounce in rough rice, it's going to be pretty significant because of the extreme oversold condition we've been in and still are. New low for the trend today and new low potential close for today for the whole trend. And well below any major historical resistance. So the next bounce is going to be pretty good on this one when it starts. Rough rice. Coffee, I can say the same kind of thing about coffee. I have to look for a significant bounce, very oversold. OJ, kind of the exact opposite, got overbought quite a bit. I'm looking for a correction that started today. Gold, everybody loves it, double bottom. I did get a buy signal officially on my ER signals on the first low of a double bottom. We could have a double bottom. This looks like it's trying to form a double bottom in gold. Hogs, a little overbought a few days ago, told you it was going to have a correction. Today's the day it really surfaces. Down, big down move. High grade copper, I think we looked at this before. Silver neutral, and I'm going to leave you here except for mentioning two things. We're progressing with the change being adopted to Ninja charts, and we'll be starting to use Ninja charts in the next couple of months, as opposed to TradeStation or intermingling. But this chart is on the euro dollar. We cut the bottom to the day on a forex symbol, and the dollar index DX is exactly the opposite. On the high day, we got an official red bearish ER signal. I'm starting to talk about sectors a little bit, but I'm going to leave you with a tantalizing question. If you got a bullish engulfing and a symbol which represented the gold sector, don't you think you're going to get a lot of individual gold stocks that also had the same signal? We might take a look at that next on tomorrow's YouTube meeting. You have a great day. Great trading.